Good afternoon, Trade Scores market scan video for February 27th. Okay, so I have here the 30-minute chart going back 20 days. And what you see is over the last couple of weeks, we are essentially sideways. We're basically at the same price we were 2 weeks ago. Along the way, we've had some up and down gyrations. What's important in this chart is the fact that volatility is compressing. So I'll show you how that works. If I draw a line across this bottom and I draw a line across this top, these tops, then you can see that those lines are converging toward one another. They're moving toward one another. And that means volatility is compressing. Now, volatility compresses when investors are gaining confidence about valuation. When volatility compresses and there's rising bottoms in the chart, then you have not only confidence building, but also optimism building. So what we have is a chart where you're building a foundation and you have optimism. All right, and as traders, we want to buy breaks from strong foundations out of a period of optimism. All right, there's no upward trend yet. The trend is essentially sideways, but the bias based on the rising bottoms is of optimism. And we're building a foundation because eventually this is going to get so tight that we'll have a nice narrow range which becomes a foundation for a breakout. Now that breakout could happen tomorrow, but if it did, it would be breaking from a weak foundation because it's still quite volatile. If volatility diminishes and compresses, then you've got a nice strong foundation for a breakout, and that improves the chance that the breakout results in an upward trend. So that is the scenario for the small cap sector. Now, if we compare that to the S&P 500, you see that you don't have compressing volatility. The line that I draw across the bottoms and the line that I draw across the tops are not converging toward one another. We have a market that is in an upward sloping channel. So this market has a bullish trend, but it doesn't have a strong foundation. And therefore, it has the potential to see a pullback eventually. And if we go to the 3-year weekly chart, you can see that this market has gone straight up without really much of a pullback. Well, when markets go straight up, eventually the upward trend breaks and you either go sideways for a while or, as in the case of 2022, you go into a downward trend. So we are due for a pullback in the large cap market, but that's really in the 5 or 6 stocks that dominate the S&P 500. And if that happens, then we expect that we'll get either a pullback into lower prices or perhaps just go sideways and build a new foundation. Why would the S&P pull back and the IWM move up? Most likely because of a drop in interest rates. Because a lot of money has flowed into these large cap tech stocks because they're not susceptible to gyrations in interest rates. They have so much cash, it doesn't matter to them. In fact, if anything, higher interest rates give them a better return on their cash. But for a small cap company that has to borrow money, that's a real factor. For a small cap company that relies on the consumer to buy their products, well, consumers buy less when interest rates are rising. People still want to buy their iPhones. People still want to buy crap on Amazon, but those small cap companies sell less. So we could get a dynamic in the market where the S&P has a little bit of a pullback if interest rates start to drop, while the small cap market, and we'll just jump over to the small cap market again, if the small cap market is able to break out through resistance. Now you can see it's close. We're sort of knocking on the door. You can see that the trend is up on the 3-year chart. We're only sideways over the last 2 months. And so we're brewing for a breakout. Now, what's going to drive a potential breakout is if the bond market can break its downward trend, which it's been in for a long time, but you can see that the trend is getting shallower. See how this slope is less or more steep over here than it is now? So the intensity to the downside is reducing, and we may see the bond market go up, which would help small cap stocks go up, and which may also cause a little pause in the upward trend for large cap stocks. All right, so that's a little lesson on the markets. It's why we're waiting for opportunity in the broader market because most stocks look more like the IWM chart than the S&P chart, because the S&P chart is dominated by the big 7 stocks and only Tesla really hasn't kept up. All right, so I'm doing some market scans now to see if there's any stocks of interest on the Canadian market. But before I do that, I have to just change my default chart time frame to a daily chart because I had a 20-day chart, 30-minute chart there. So now that I've done that, I've set my default. I can run a market scan in Stockscores, and there are those stocks to look at. So I zip through these charts looking for stocks breaking from predictive chart patterns. This Timber Creek Financial breaking its downward trend line from a little rising bottom. I think it's pretty good. I'd give it a 6 out of 10. The issue is it's going to run into some resistance around $8, so the upward potential is not worth the risk really. Let's go to the US side, and I'll run the abnormal breaks US. I'm going to limit my search to stocks under $20, and we should still get quite a few, 77 candidates. So there's certain principles that I look for when I'm going through these charts. I'm looking for stocks breaking from good foundations. I like to see optimism in the chart, and I like to see abnormal surprise activity. If a stock is normally kind of trading boring 1 million shares a day, and then all of a sudden it trades 5 million shares a day, and it breaks to the upside from a strong foundation, then you could say, well, people that follow that company the closest have some information that justifies paying that higher price and doing so aggressively. So as I zip through these charts, I've got a trained eye to just look for that kind of burst of abnormal activity. So here's CXAI. This is a stock that we day traded today in the Stockscores Active Live room, but it's also shaping up for a decent longer term chart pattern. If we go to the 3-year chart, you can see that it's had a strong foundation for a while and it's coming alive. Now on the negative side, it's got a real uphill battle because it was at much higher prices in the past. It's got a lot of ground to make up, and I'm not sure that the reward for risk scenario pays off well on that stock. So I would give that one a 6.5 out of 10 if I was going to rate it. I like it more as a stock to swing trade or day trade, which again, we were doing in Active Live today. Here's CDXS. This is a good turnaround chart. You can see we've switched from falling tops to now rising bottoms. And if I look at the 6-month daily chart, I can see there's surprise strong volume, surprise breakout through resistance, from optimism, from a strong foundation. So that tells me that that is got a pretty good potential to go higher. I don't see any major resistance. It is still going to work through some longer term resistance. So I like this one better. I don't know if I'd give it a 7 out of 10. I'd probably give it a 6.5, but I actually like it better than the CXAI that I looked at. So I think that one is worth considering. And again, that was CDXS, 6.5 on that. I like CXAI as a 6.5, but more for a swing trade, trading off of the 30-minute chart or the 15-minute chart. All right, so just continuing this process, almost done. And of course, do this every day. You'll find stocks with the good patterns, but they come in clusters. We haven't had many lately because the larger market, not the S&P 500, but the greater market is still lagging is still doing much better. The greater market is still doing much better than the S&P 500. I'm trying to look at these charts and talk at the same time, and it's like trying to chew gum while I walk. Okay, so I don't see much else. This ALT was a good trader today on the swings. We had a swing entry on that this morning on Active Live as well. Strategy I call Alpha Echo strategy. It was abnormal yesterday and then started to run again today. But for position trades, I don't see much else. So that's a little overview of the market situation. A couple of quick market scans, a couple stocks that look interesting, CDXS and CXAI, and hope you've enjoyed it. Trade well.